Hi, I'm Chris Leader. I'm the president of Leaders Edge Training. Welcome to our monthly tips. I hope you're going to enjoy them. Please feel free to forward them to anyone on your contact management system. The tip this month is entitled Tax Planning Tips. It is January. For most people, that means it's time to gather up all of your receipts and invoices from the past year to prepare for dreaded tax time. I'd like to give you some great tax planning tips that will hopefully save you some money and allow you to plan your expenses for the upcoming year to reduce your taxes. The first lesson in business is, it's not about what you earn, it's about what you keep that counts. Too many commissioned salespeople get caught in the trap of only focusing on gross income. Yet what really counts is what you have left in your bank account at the end of the day after you've paid all your expenses and taxes. That is why tax planning is so important. The goal is to work less and keep more of your hard-earned money at the end of the day. Commissioned salespeople get great tax benefits. In most cases, any reasonable expense you would pay to potentially earn more revenue will work as a tax deduction. But I have to warn you, commissioned salespeople tend to get audited more often than anyone else. So be realistic when you consider what expenses are reasonable. My advice is, when in doubt, ask your accountant. I'm all for maximizing your write-offs, but writing off questionable expenses will only get you in hot water later if you should get audited. Most people only meet with their tax accountant at the end of the year. They walk in with their shoebox of receipts under their arm and expect the accountant to magically fix everything. If you only meet with your accountant at year end, then they can only give you advice on what you've already done. This retroactive approach means you're likely missing out on tax benefits that you could otherwise have taken advantage of if you had planned your expenses properly. Rather than waiting till the end, meet with your accountant at the beginning of the year. Bring your budget and business plan so that you can discuss what you're planning to do for the upcoming year. This way, your accountant can give you advice on how to structure your expenses to get the best results at tax time. While you're there, ask for advice on how to better organize your receipts to reduce the amount of work it takes to complete your tax return. This will save you money and help you feel in control of your finances, and help you should you need to defend yourself during an audit. While we're on the subject of audits, I have a few tips to help you survive a visit from the tax man. First and foremost, let your accountant handle all of the communications. Ask the auditor to perform the audit at your accountant's office. Don't get caught answering any questions yourself. You may accidentally say something that gets you in hot water. You are perfectly within your rights to have your accountant do all of the talking on your behalf. If you receive a letter saying you have been chosen for an audit, respond quickly. Ignoring this letter will not make them go away. It will only make the auditor intolerant later when you try to negotiate with them. Cooperate by providing all of the information they request, but ask them to get all the documents from your accountant. Don't provide more information than is requested unless it will help your case. The last tip is to negotiate. If the auditor wants to disallow some of your expenses, try to negotiate with them. Where the rules are not black and white, the auditor may be willing to give a little. They may not agree with you that the expense is reasonable, but if you can make a strong case for why it is, chances are they may reconsider. Your best defense is a good offense. Hire a great tax accountant to file your tax returns rather than trying to do it yourself. If you ever find yourself in an audit, they will fight on your behalf to ensure the auditor understands your business.